What's up, guys? Welcome back to another video. Thanks for tuning into Stock Essentials. My name is Alex. We're going to be going over earnings for this week and what stocks you should be watching for and some potential plays for the upcoming week. So not much is going to be happening this week with earnings, as you can see here. Very small amount of companies and not very many recognizable names. But we are going to be watching three particular companies for earnings this week and go over some potential plays. The first one is going to be ORCL, which reports earnings Monday after the market closes, and the second one is going to be FCEL Energy, which reports earnings Tuesday before the market opens, and then Wednesday we have WEBR, which reports before market opens on Wednesday. So those three stocks we're going to be watching and go over some potential plays. The first one, FCEL Energy. It is a company that develops FCEL energy, and with this movement towards green energy, this is definitely a good contender to kind of play as a riskier investment, because this was a penny stock earlier in the year, trading between a $1 $2 price range before skyrocketing late 2020, early 2021, before going on a massive downtrend. And we're basically sitting at really low levels. This stock is severely oversold, and we basically are kind of playing this stock as a riskier investment. As we can see here, it's on a massive downtrend. RSA is indicating it's oversold. So if you want to play this stock, it's going to be risky. Don't really recommend options on this stock. I would just recommend buying and holding shares of this company for earnings. Of course, keep your stop losses in place, because it is going to be pretty volatile, as it is with all of their earnings in their previous quarters. So that's going to be FCEL Energy. This next stock on our list is going to be ORCL, which is a cloud software company. They do a lot of stuff with databases. They also develop Java. So very recognizable company. Probably the most recognizable on this list. And if you take a look at the 5-year price history, they've been pretty good. Nice uptrend. Nothing crazy. Very steady gains. They didn't even drop that much during the pandemic March crash. But overall, past years at 47%. So we're sitting at all-time highs. But the good news is that it has been consolidating this past month between this $87-$90 price range. So it's definitely looking like that this stock is going to explode during this earnings season. A lot of people are anticipating a huge movement for the stock, as we can see here. It's a fairly priced stock, and it could go either direction. But overall, if you don't mind owning the stock for long term, it could be a good opportunity to just buy and hold shares and don't look at it. So buying in shares for this stock is also a great strategy. But if you want to play options, I would recommend, instead of buying call options, you could just sell options. Premiums are pretty good on this stock. A lot of people are anticipating a pretty big move. What I would probably do is this $85 strike, selling a put. You're going to receive $88 of premium here. So it's going to be about a 1% return, over a 1% return in 1 week. A really nice return. And what we're really aiming for with selling options is going to be 1 to 2% return every single week. So essentially, over the course of a year, you're doubling your money, which is a pretty nice return. So $85 strike is going to be a pretty nice strike, 80% chance of profit, and you're going to receive some nice premium rate right here. But you'd have to put down over $8,000 of collateral. So that's going to be the downside if you have a small account with just a few $100s. If you have a smaller account, just buy and hold shares for this company. Next stock and last stock on our list is going to be WEBR. They're recognizable for manufacturing outdoor cooking equipment. Most notably, their grills. A lot of people are do recognize this brand, and it is a new company on the stock exchange. They IPO'd on August 5th, and they've hit all-time highs of around $20.44 before dropping pretty significantly the next week, all the way to around all-time lows, $14.13. So this stock is definitely pretty volatile, but it does show that a lot of people are do want to buy the stock at this low $14 price point. As we can see, once it dipped that low, there's a lot of buying pressure that went into the stock, and it definitely rebounded pretty nicely. But we're seeing another downtrend again in the past week, and we're almost back at all-time lows of the $14 price range. If we take a look at WEBR, it's definitely a stock that's oversold right now. So we're really looking for a nice bounce off of this $14 mark if it does happen to continue this downtrend. And at that price point, we're pretty okay owning shares of that stock, seeing how it rebounded pretty nicely. So if you want to just buy and hold shares, you can go ahead. It's a pretty cheap price stock, but options is also going to be pretty good as well. Two particular options I'm going to be recommending, and of course you got to do your own due diligence, but this is what I'm looking at. Call options, buying call options, probably a month out, October 15th, either at the $15 or 17.5 strike. It's not going to cost you that much, and it's going to be a riskier options play right here. But if this stock does make a pretty big price movement, you could see some huge returns, since implied volatility is pretty low, and these call options are going to be pretty cheap. But if you want to play some shorter term options, I would recommend probably this $15 strike cash secured put. And you're going to be collecting $65 of premium, with a 63% chance of profit. So basically this means if WEBR stays above $15 at expiration, this contract expires or worthless, and you make your full profit of $68 or $65. If WEBR drops below $15 at expiration, September 17th, 1 week from now, you have to buy 100 shares at $15 each, which is not that bad considering you're going to be collecting $65 of premium no matter what if you hold it till expiration. So this means that you're going to be owning 100 shares at $14.35 per share, which is basically at all-time lows, and it's going to be a pretty nice price point to own shares at this, considering that it's never been below $14. So that's about it for this video. Some 3 stocks that we're going to be watching. Nothing crazy is going to be happening this week. Very mellow week. Not many companies reporting earnings, but those are the 3 stocks we're going to be watching for. So comment and like, and of course subscribe if you're new to the channel. It helps out a lot. Thanks for watching.